If it's Tuesday, it's Trading Tip Tuesday. Last week we discussed the humble horizontal line. It's only natural that this week I discuss the diagonal line, a perhaps even more underutilized, misunderstood, dare I say hated tool that some traders don't use at all, refuse to use, misuse, abuse, downright deny. So if you look at any chart, do some back testing with diagonal lines. What do you see? Well, how do you draw them? First of all, you draw these lines on extreme highs and extreme lows. I have a line chart as opposed to a candle chart because a candle chart, you get into the issue, do I include the wick? Do I include the body? Let's erase that from the issue here. You can say, you know what, we're going to use candle closes, which is the body of a candle on any time frame. Pick any time frame, any coin. I'm going to look at gold in a second as well. Any stock, any equity, commodity, whatever you want to do. Draw some lines on it. The best way to do this really is to use the ray tool on TradingView, because then you just pick 2 points and it auto draws the rest of it. I'll show that as well in some charts. But if we just back test diagonal lines, they generally tell you all you need to know regarding support and resistance. The second thing about diagonal lines is you'll notice if you are aware of chart patterns, you get chart patterns just emerging naturally over and over and over again. Ascending triangle, equilateral triangle, sort of equilateral triangles. And depending on what those are, you can say, okay, there's a bias here one way or the other. And then when it breaks the diagonal, you can say, all right, bias is confirmed, bias is not confirmed, that sort of thing. So start there. Start simple, right? Obviously, there's a diagonal support here. How else do you represent that other than a diagonal line? You can represent it in a horizontal line. You can draw horizontal lines on each of these lows. The real issue is when people redraw these triangles over and over again. That's the biggest issue. You don't want to do that. You don't want to redraw a triangle to fit your bias and say, oh, look, it broke the triangle to the upside. You know, I see this triangle a lot. Even legacy people who have no clue about crypto and Bitcoin really like this triangle, maybe because it's so obvious. But there's very clearly no violations of this triangle aside from recently. Again, using the ray tool, you pick 2 points and it draws the rest of it for you. So you can't even bias your way into saying, do I include this? Do I not include this? We're currently on the bullish side of this, obviously. You can't really redraw this and argue a bearish trend here. You can say, all right, we were consolidating inside these diagonal lines since 2017, and we're on the upside now in late 2020. Just another way you can use subtle things to adjust your bias. So if you're bearish here and you look at this, you got to ask yourself, how would I be biased if I were to break to the downside? You know, would I be bullish down here? I don't know. I guess that's up to you and how you trade. But for most people, if you're breaking above a diagonal line, it's bullish. If you're breaking below, it's bearish. Especially a multi-year, multi-touch. Stuff like this, you want multiple touches to be sure, definitely. You know, we had these couple touches and it was like, okay, maybe this is a thing. Then we had this thing in March out of nowhere and you get more and more confident, right? And another thing with chart patterns is they typically break upside or downside when 3 quarters complete. Arguably, that was the case here as well. Let's look at some more. This is ETH. This is a 12-hour chart back in the day, 2017. ICO's popping off. Does the chart care? Not really. Does the technical trader care? Not really. They know that there's a diagonal support here, just as they suspected a diagonal support here, albeit messy, but it was there. This was also messy head and shoulders at the time. But again, another way you can utilize diagonal lines for support and resistance. This is a nice ascending triangle. And we saw that for BTC. Again, this is 12-hour ETH more recently, 2018, 2019. Diagonal line. Some of you are looking at this saying, duh, of course. But a lot of people ignore the diagonal line and don't use it at all, which I really don't understand. Because if it's obvious to you, it's obvious to me, it's obvious to a lot of people, that only helps solidify the support and resistance level. Because more people see it, more people trade it as such. You can call it a confirmation bias, wishful thinking, self-fulfilling prophecy. Call it whatever you want. It's very clear most of the time what this stuff is. Here's another example I don't see many people using, but crypto loves its parabolic rises and descents, but I'll highlight the rises here. This was BTC's parabolic rise from 2015 to 2018. Most of these parabolic rises aren't multi-year. This one was in this case. Doesn't matter. As you establish lows, you can start drawing diagonal lines. So we get 2 local lows, two relatively extreme local lows. Draw a line. It stays there. And we keep doing this as we establish new lows, new higher lows in this case. And you can use these as supports as opposed to the curved line, the parabola, whatever you want to call it. But you can use these as supports on the way up. I don't see many people doing this, but it's something that occurred to me making these charts. You know, it does get messy, sure. You can say this is hindsight. Okay, I don't care. I'll look at gold in a second. Again, it's active right now, a way to trade this. So we look at these diagonal lines. We keep adding diagonal lines as we go up, right? We can sort of project what the parabola might look like as it's happening, but adding these diagonal lines helps establish support. So that way, at the height of a bubble, when everybody's getting stupidly rich and you're not, you know, that famous New York Times piece, you can use the chart and take yourself out of the equation and say, what's going on here? Are we breaking these diagonal lines? Are we breaking below this parabola? Maybe you're not convinced on the first break. Maybe you're not convinced on the second. Maybe you're convinced on the third, but another way you can play this is using stop losses for percentages of your position. So you can say, you know what, I'm going to get out of 25% of my position on the first break, 50% on the next, 75% on the last, etc. Whatever you want, however you want to play this. You know, this is up to you, obviously, but that's just an example. You know, it was very clear after 3 or 4 breaks of these support diagonals that it was game over for the parabola for the bubble in that case. If we look at a more recent example, this was earlier this year. This is the hourly chart, which is even more insane when you're getting these parabolas on the hourly chart. Well, you'll see this on a lot of DeFi stuff, especially lately. Aave, Link, you know, anything. You can use this for anything. Draw your parabolic line, and as you get these new lows, these new higher lows, use your ray tool on TradingView. Draw the line, draw the line, draw the line, draw the line. And as we get to the top, you know, then you get concerned because all of a sudden the party stops, the music stops, and people start to panic. And, you know, maybe you're not convinced on the first break. Maybe that's a warning sign that the parabola is waning in bullish momentum. And then the second break, you say, okay, it's time to let it go. But as it breaks the third and fourth support diagonally, you can say, all right, maybe the show is over, right? Again, just another way you can use diagonal lines. Let's look at gold. This is the 12-hour gold chart right now. This is, what's today? October 13th, right? Very similar situation for gold. Not something you see every day for gold because gold acts really slow, as most metals do, in that it doesn't move quickly most of the time. But you can use the same principle for diagonal lines. Pick 2 lows, diagonal line, diagonal line, diagonal line. And what do you know? We're breaking the parabola. We're breaking the diagonal line currently, the first one at least. So it says to me that this trend is definitely in trouble. If you weren't already sure just based on this parabola, you know, you could say, all right, you know, it's clearly breaking down where it shouldn't be in multiple ways, but just another way to use diagonal lines here. You can also just use diagonal lines as a trend channel. And this video entirely was secretly just a pitchfork video because I generally get a lot of people asking, how do I use pitchforks? What are they? How do I trade those? But obviously you can just use diagonal lines as a trend channel, buy zone, sell zone. Becomes more convincing once you get multiple touches. But if there's 35 touches on a diagonal, the market's clearly paying attention to that, right? It's clearly saying, this is where we buy, this is where we sell as a collective, as a hive mind. Again, you can say this is hindsight trading, whatever. Try it the next time you see this. You know, try it the next time you see 15 touches of a diagonal. Just draw it out. So here's the pitchfork, the humble, the mighty. I keep using the word humble because it's just so simple, right? There's a pitchfork button on TradingView on the left side. Here's how I use pitchforks, okay? You pick 3 points. Typically, these are extreme highs or extreme lows. This is the daily chart for BTC. This is the log scale. Something else people ask me because they draw out these pitchforks and they don't look like mine because I'm using log scale. So the first step is to have the vision to see 3 points on a chart where you can draw a trend. This one, pretty easy. The ones I'm going to show, not so easy, but you can play around with it. The reason I like this is because it draws your trend channels for you. It's predicting a rate of change for you. There's a time component here as well. It's predicting where price wants to sit, where price wants to live. It wants to live in the median line in this diagonal. You can also think of this as a more bearish part of the trend below that median line, a more bullish part of the trend above that median line. You can think of this as a buy zone, buy channel down here, a sell channel up here. You can think of the median line as a magnet for price, which is another reason why I'm so bullish on Bitcoin here. And what you don't want to do is fit the price beyond these 3 points. You want to pick the anchor points and decide on the validity of the channels at that point. Does this look convincing enough where these levels are being respected? Is this loose? Is it imperfect? Is it subjective? Of course, this is the most subjective tool I probably use in my trading. But you can't deny when you see the trend of channels like this, you see price differently. At least I do. The other thing with the time component is you can say to yourself, if this rate of change holds, if this trend channel holds, then it's reasonable that by January 1st, there's a target of 22K, regardless of how you feel about the chart or the price or the fact that that's a new all-time high. That's irrelevant to the rate of change that's being shown here. And we can look at early examples for Bitcoin and how this plays out over time. So this was 2015. I have an example of this on my TradingView account, whatever, but I only mention it over and over because people generally give me a lot of flack for stuff like that. But throughout 2016, 2017, there were a lot of people drawing this pitchfork because this trend channel was just eerily accurate the entire time. Another way to think of this is when it's below this bullish channel, it's invalidated. When it's above, it's equally invalidated at that point, honestly. But you can see, even though we bubbled out here, we paraboled out, we eventually returned to the median several times. And right now we are nowhere near this, obviously. But this will come back into the conversation if and when we approach the median line again, because historically it's been a really good barometer for how overbought are we, how oversold are we. So even though we're nowhere near it now, to me, we're still oversold based on the rate of change from 2015. If this holds, we'll see. That's a big if, the biggest if that ever ifed. And we can look at other current examples when you're deciding bullish or bearishness. This is XRP, maybe a not so obvious anchor points here. But over the past 2 years, I've been tracking this, and you can look in the articles in Brave New Coin to see all these. And I think a lot of people, again, just look at this and say, it tells you nothing. It's useless. It's arbitrary. But what it does tell you is, how bearish are we? Are we above or below this channel? Are we on the bullish side of the bearish channel? We were. Are we completely out of it now? Yeah, XRP is a different animal. It's no longer sitting within the confines of this bearish channel. You can no longer have the expectation that it's going to return to this median line because the bearish channel is invalidated. And you can look at another current example, EOS, where it's still sitting in the bearish trend channel. So until it breaks above this trend channel, it's hard to get seriously bullish about it, in my eyes. There's also a weak expectation that this may return to the median line. And sometimes, but not always, when you add this, it's very clear that the median line just tells a story. It was below the median line, then it was just riding above it, touch. Here's Monero, another current example. This one's a little different in that the anchor point is even lower than the initial anchor point. I think it's still fair, still valid. I don't know what the official pitchfork rules, the pitchfork people would say, but again, these diagonal lines, these trend channels tell a pretty clear picture, especially when you think of the median line as a strong support resistance. Very clearly, it's acted differently since it's been above this median line. And you can say to yourself, when it's above these diagonal channels, it's in the overbought territory. It's time to cool off. When it's down here, it's oversold. Time to pick some up. When it's at the median line, it's a fair price considering the rate of change over the past year and a half or whatever it is. And if we look at two more last examples, Link, very reminiscent of, this is Link USD on the daily, Link BTC on the daily, very reminiscent of that 2015, 2018 pitchfork for BTC. Once you add this to the chart, it's like, oh, duh, of course. It's just riding this trend channel, sell zone, buy zone, expected price zone. And even when it got way, way out of the pitchfork, it still came back. So that's one caution for bull trends on a bullish fork, for example, a confluent trend. If it gets way overbought, it tends to come back, just like BTC did, even though this was like a 50% drop, whatever it was. And then the last one, Link USD, has also held very nicely. Sell zone, buy zone, median expected price. So I really encourage the usage of pitchforks. It's helped me tremendously. Diagonal lines have helped me in chart patterns. So whether you're using them for support resistance levels, trend channels, They should always help tell a story of, am I bullish here? Am I bearish here? How overbought or oversold am I? Is this a key level, a critical support, critical resistance, where the market's going to flip one way or the other? Hopefully this video was helpful. Hopefully you are able to use diagonal lines in your trading to become a more profitable trader.